What's up, millennials? In exchange for about 10 minutes of your time today, we're going to take a look at a company called Aeva, the valuation of it. And this company is a Lidar company that is going to be acquired by the SPAC under the ticker symbol IPV. Before we start, a few things first, as always. First of all, I have not done extensive research about this company just yet. We are just going to take a look at the valuation of this company according to the company, so Aeva itself, and also the SPAC. Secondly, don't trust me, verify me. I'm just documenting my journey here. I'm not a financial advisor. Third, Stock O'Clock. These are very short 1-minute videos that I post every single trading day with news about the stock market. And lastly, Discord. If you want to join our Discord, then you can go to nesami.com/discord, leave your name, leave your email address, and you're going to get access to it. So before we hop into the valuation part, we are first going to take a look at the introduction of this company. So Aeva is, according to the company themselves, world's first 4D LiDAR on a chip. They already have agreements with 4 of their top customers, and all these agreements already represent $1.3 billion in revenue. So they already have some kind of contracted revenue, right? And they also have several partnerships with large automakers out there. The merger date is not yet known exactly, so they expect to close it rather somewhere in Q1, but yeah, we just need to wait until we have an amended S4 filing to get the merger date. With regards to their pro forma valuation, we can see that they, as almost all the SPACs, are using a base share price of $10 per share. And we can also see that they are going to have 213.056 million shares outstanding, a very beautiful specific number. So with those two numbers, we can already do a few things. First of all, we can calculate the pro forma market cap based on that share price of $10 and based on the amount of outstanding shares after the merger. If you multiply those two numbers, you're going to arrive at a pro forma market cap of $2.1 billion. But then also take into account that they are going to have $328 million in cash on their balance sheet. So that means that if you take that market cap and subtract the amount of net cash, you're going to arrive at a so-called pro forma enterprise value. So basically what the company, Aeva, is worth itself. So if we do that in this case, we can see that the market cap is 2.1 billion. The amount of net cash is almost 0.3 billion. So that leaves us an enterprise value of 1.8 billion, right? So the company is actually worth $1.8 billion based on a share price of $10 per share. The thing is, however, if we go into TradingView and we go to IPV, let's take a look. It's now at $15.85. Okay, so let's change that, $15.85. So now we can see that the pro forma valuation has gone up a little bit. The pro forma market cap has gone up to almost $3.4 billion. And then if we take off the amount of net cash on their balance sheet, we're going to arrive at an enterprise value of a little bit more than $3 billion. So let's now take a look at the future enterprise valuation first. And for this method, we are going to use the EBITDA numbers and an EBITDA multiple instead of revenue numbers and a revenue multiple. So let's take a look first at the projected EBITDA of 2025, because that is the year we are going to do the future evaluation for, right? So as we can see in this investor presentation, they expect to have an adjusted EBITDA in 2025 of $347 million. Let's just put that in our calculation. So $347 million by 2025. Now the other thing we are going to need is an EBITDA multiple. And to get that EBITDA multiple, what they did was to look at similar companies in the space that are trading right now on the stock exchanges, and they said, okay, well, we see that companies like Nvidia, Xilinx, Ambarella, Mobileye, they are trading at relatively high multiples. We see Nvidia at 35x, Xilinx at 29x, Ambarella at 74x, and Mobileye at 40x. Just a little side note, they also looked at Velodyne and Luminar, which are also Lidar SPACs, or were Lidar SPACs in the case of both of them, actually. But they didn't really decide to take a look at these companies or these median numbers for some reason. Maybe they thought these were too low or something like that. I'm not entirely sure why they left these companies out. But for any reason, we are just going to take a look at the median numbers of Nvidia, Xilinx, Ambarella, and Mobileye. So as we can see, the SPAC, IPV, and Aeva say, well, the overall median of these 4 companies is 37.7x, right? okay, 37.7x, then they say, well, sounds fair to us. We are going to use for ourselves a range of EBITDA multiples, 34x for the low end and 40x for the high end, right? So then we can already do something, because we just said at the beginning, well, they are going to have an EBITDA of $347 million by 2025, right? So we can now determine the future enterprise valuation by taking that EBITDA of 2025, and we're going to multiply this by the low multiple first of 34x. So that is going to give us a future enterprise valuation of a little bit more than $11.7 billion, $11.798 billion. That is for the low end, right? Let's now do the same thing for the high end. So again, we have that EBITDA of 2025. We're going to multiply that this time by the high multiple, the high EBITDA multiple of 40x. And that is going to bring us to an enterprise valuation of $13.88 billion for the high end. Then we can also say, all right, well, let's take a look at the average of these two numbers, which we're going to name the midpoint valuation, and that is going to be $12.8 billion. But that, of course, is the future enterprise valuation. We want to know the current enterprise valuation. How do we do that? Well, we simply take those numbers. We first go for the low valuation, $11.798 billion. And we're going to apply a certain formula, and we need two numbers for this. First of all, we need to know how many years we need to discount it back to the present, right? And we have been taking a look at EBITDA numbers from 2025. We now live in 2021. So that means that there are 4 years in between, right? From 2025 back to 2021. So that is one number we have, number 4. And we also need a discount rate. Well, the discount rate, we can find that right here in the investor presentation. It's 20%, which is very common for SPACs. It's very common for almost all the SPACs that have done valuation videos for. Cool. So now we can actually use a certain formula. How does that go? Well, we first take the low enterprise valuation of 11.798 billion. We divide that rather by 1.2. The 2 there is standing for the discount rate of 20%. And we do that to the power of 4 because of those 4 years we need to discount it back from 2025 to 2021. And that is going to give us a current discounted low enterprise valuation of almost $5.7 billion, which is the same as my Excel sheet and also the same as in the investor presentation. Very cool. So let's now do the same thing for the high valuation, right? We said, well, the high future valuation is $13.88 billion. Let's do exactly the same formula. So we divide it by 1.2 because of the discount rate of 20%, to the power of 4 because of those 4 years back in time. And that is going to give us a discounted high enterprise valuation of $6.7 billion. Then we can also say, okay, well, let's now take a look at the average between these numbers. Well, that is going to give us a enterprise value, a midpoint enterprise value of $6.2 billion. And then for the last step, we just need to do a few more things. So we now have these enterprise valuations, 6.2 for the midpoint valuation, 5.7 for the low valuation, and 6.7 for the high valuation. Then we can take that enterprise value, add the amount of net cash to arrive at a fair market cap, if you will. So for the low valuation, that would be 6 billion. For the midpoint valuation, 6.5 billion. For the high valuation, 7 billion. And now we can take those market caps, divide them by the amount of outstanding shares after the merger, which we said in the beginning of this video is going to be 213 million shares outstanding, more or less. So if we do that, if we take those market caps, divide them by the amount of outstanding shares, we're going to arrive at these fair prices per share. So for the low end, we have a fair price per share of $28.24. For the midpoint valuation, $30.60. and for the high valuation, $32.96. So a current midpoint fair price per share would be $28.24. And that would mean that according to the current price per share, it is actually undervalued. So Aeva is actually undervalued. Now, of course, don't trust me, verify me. I'm just documenting my journey here. I could be completely wrong. Just check what I am doing. And also take into account, we have been taking a look at assumptions. We have been taking a look at a predicted EBITDA, a certain EBITDA multiple. And if you change one of these numbers, the entire calculation is going to change as well, and your fair price per share is going to change as well. I hope this video provided you with some value. If it did, please consider sharing this video with your friends who are also investing in SPACs. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!